Today's market call is presented by FactSet, financial data and analytics powered by Tomorrow, and SoFi. Get your money right, all in one app.
In Austin, Texas, a.m., but it's 11 o'clock on the East Coast.
Have you ever done that?
We're here in Austin, Texas.
No, I know. But have we ever done, you say 11 a.m. on the East Coast, right?
We're 10 a.m. now.
Yeah.
Because we're in Austin.
Yeah.
By the way, we're at this Van Zant Hotel.
The Hotel Van Zant.
Yeah, that's what
Not
I said.
a Stevie Van Zant.
No, you're not? No. But they have some cool stuff out there, like Marshall stacks and all these cool things. Yeah. But that's where we are. We're at a conference, Ascend.
The Ascend conference. This is a company called Apex, and they are like the engine for lots of trading companies here. Like, you know them. SoFi is actually one of the customers. There's people from SoFi here. You know who's going to be from SoFi with us today?
Elizabeth Thomas.
I
think we saw, by the way, am I allowed to say this?
Yeah.
Am I dexing her?
Yeah.
She came in prior to the start of the show.
Correct.
Just to sort of make sure everything worked.
With Griff Riv.
GRT was with her.
Yeah.
The kid's got a great
Griff
GRT.
River Thomas.
She's got a great head of hair.
Oh, there she is.
There's Elizabeth.
Speaking of a great head of hair, what's up, Liz?
Hi, guys.
Good to see you.
We're at this Ascend conference. I don't know if you missed that. There are some peeps from SoFi. We're going to find them. We're going to tell them that we know the legend.
We're going to chat. SoFi. We're going to chat Elizabeth up for sure.
What is it for a woman? There's like the man, the myth, the legend. We need is it just the woman? It doesn't have the same.
Well, you could be a goat because there's a male and female goats.
No, well. You know, not that. Well, I know that.
OG, male and female
original gangster.
If you are a woman or a man, you're an Iron Man.
Yes, correct.
They don't distinguish between
Iron person.
So it's not an iron person.
Let's get to it.
My point is, like, you could be the man, the myth, it could be the same type of thing.
Let's get to this.
It's a market day here.
It is a market day. When Guy says a market day, it means like something has broken out of the malaise that we often find ourselves in, or that just kind of slow grind higher. Liz, when you look at the market on a day like today, I'm looking at the S&P down 1%. I'm looking at the NASDAQ 100 down about 1.5%. Do you see it as a rotation day? Because I'm seeing retail acting okay. I'm seeing some of the software names are actually green. I'm seeing pharma, which has been a massive rotation this week. Even the energy complex up a little bit. How do you think about it? Because again, do you get optimistic about where money is moving, or do you get pessimistic about where the money is coming out of?
Yeah, so I think it's a great question, and it's a good way for investors to look at this market. First of all, I find it interesting that on the day after the government has reopened, we are down, right? So you would have thought that the idea of a little more transparency in the data, the fact that we've kind of gotten out of this situation, now longest government shutdown in history, right? So we're still not sure how it's all going to shake out, but the market down on that, perhaps we baked it all in yesterday. That's very possible. The rotation that's been going on. So a few things. If you look at it, let's start with, obviously broad market. We look at things like the S&P still upward direction, right? Today withholding, but in an upward direction, but different sectors coming in to carry their weight. So there's a difference between a rotation strictly into defensives and a rotation that's just looking for other opportunities. I think right now, this is a rotation looking for other opportunities because, again, bigger picture, we're still a few weeks out from the end of the year. This is when that rally really usually kicks in. There's not a lot standing in our way. So this rotation of investors trying to find places where they can get return through the end of the year and take part in the chase that is likely to continue. I think that's a lot of why healthcare has seen such big inflows, and particularly it's pharma and biotech. It's not health insurers, it's pharma and biotech. So those places in particular, and I have been saying this for a while, that investors are looking for other places to find growth opportunity. So when you're rotating out of a tech stock or all of the overvalued, the Mag 7, right, all these concerns that are going on, which we can talk about later, when you're rotating out of that, but you still want growth opportunity, pharma and biotech have been big beneficiaries of that. Energy is actually starting to be a little beneficiary of that. And you're seeing that rotation happen, I don't think in a defensive manner necessarily, but in more of an optimistic manner.
Elizabeth, what do you make of the recent, ridiculous strength in financials, specifically like Goldman Sachs? I'm not asking you to play stock market with individual names, but the outperformance over the last couple of weeks has been astonishing.
Yeah, well, I think the biggest takeaway from financials is for a while we were looking at it. Guy, you and I talked about this maybe on a pod. There was a K-shaped recovery or a K-shaped market in financials just themselves. So you've got like the big banks, right? Big diversified financials and big banks, and then the regional banks. And the big financials had done so much better, particularly year to date, and the regionals had just kind of slugged along, if not underperformed. Now, of course, there have been problems with credit quality. There's been all sorts of fraud that bled into regional banks. So there are reasons for that stress, but that has been really more recent. It's that regional banks didn't ever catch a bid when we started to think about net interest margin being a tailwind for them. So that was the head scratcher. What you're seeing now is those regional banks coming back in. I don't think anything has changed fundamentally that suddenly made everything that much more attractive. But again, this is a part of the market that was expected to start to carry a little bit more of its weight and hadn't. And now investors are finding it more attractive. So I think it's all part of the chase.
You know, it's interesting. It feels like some of these, like Goldman Sachs, let's pull this thing up. That is a beautiful breakout. I mean, like if you're just thinking from a purely technical standpoint, but I think they're kind of running ahead of this, IPO calendar, opening up next year. Because if we were to have a 5 to 10% pullback, a lot of folks are going to pull those S1s. You know what I mean? Like, and I'm just surprised that we haven't actually seen more IPOs or more M&A in this environment, because we've had an S&P since May or June that's been making new highs every day.
I agree. I think most people would have thought it would have happened long before this, given the new administration, rollback of regulation, favorable environment, money flowing. But I think you're right. With that said, I look at Goldman Sachs, which, by the way, we have been bullish on. You think about it, we've seen pullbacks in this name before, and I'm just sort of looking as to where we could get back down to. I think you're right. I don't think you're chasing Goldman here, but the level to look at is the prior all-time high in February, if you want to put a line across, which is about 670-ish, I believe. I mean, that to me makes a lot of sense. It also probably lines up right with where the 200-day moving average is.
All right, so let's take the other side of that rotation and the optimistic view, of what that means. Guy, you and I are firmly in the camp of the concentration trade, right? Mm-hmm. These top 10 names. And, we saw what happened when they sold off in April. They went down much more than the S&P did, right? So now they're much higher, all of them. Every single one of them. Let's take a little run through this. I'm going to leave Apple out because I think that's really fits into the camp of what Liz was just talking about, right? And Apple almost feels defensive at this point. Let's start with Nvidia. And I just think that this is important. We know it reports on Wednesday. The implied move the other day when we priced it up was about 8%. It's probably going to move to about 10%, right, just as volatility kind of, gets pumped here a little bit. So it had that really nice breakout after that consolidation. It's coming all the way back. I know, Guy, you've said you think there's any hiccups here, you're going to find yourself back at that 200-day moving average.
I agree. And you can put a line against those prior tops, and it'll line up with the moving average. So you'll see exactly what I'm looking at here. And listen, I don't want to make a huge deal out of it, but the fact that SoftBank got out of their position prior to earnings, I think is interesting. Now, the stock had a huge move, so maybe they just took advantage of the move, but obviously they didn't want to stick around and see what was going to happen on November 19th.
So Liz, what Guy just mentioned, $5.8 billion SoftBank. The problem SoftBank has right now is they committed $30 billion to Stargate. That was OpenAI. That was Oracle. That was back in January. And they've only funded $7.5 billion. So they're on the hook for 22.5. And that has to be, I guess,
raised somewhere.
Yeah. Okay. So that's that. Okay. That seems to be a problem. But let's look at like a Microsoft today. And this is one we've talked about this now since earnings. It barely saw an uptick until earlier this week. And it's trying to find a little bit of support at that kind of low from September. This feels a bit defensive, like the Apple. Do you think it's too early? And let's just throw Meta up. You can talk about both of these at the same time. Meta was also barely saw an uptick. It was about 21% off those recent all-time highs. Do you see money moving back in these things? Because we have seen some dispersion within the Mag 7.
Yeah, well, and I think we'll continue to see dispersion, especially with a lot of the conversations that are going on right now. So you've got companies that have differing cash positions. You've got companies, and I'll let you guys talk about the individual companies, but I'm going to lead you a little bit. You've got companies with differing cash positions. You've got companies with differing cash flow statements. And then you've got some companies announcing that they're going to start issuing a bunch of debt to cover their expenses. So I think we're going to continue to see dispersion, not just among the Mag 7, but among large cap tech stocks as they all try to now go into the next phase of this, which is, okay, we've committed a bunch of spending. We've committed to all this CapEx. We've already even committed to it in 2026 because we all know what the growth rates are for the hyperscalers. Now we have to somehow fund it and start to convince the market that we're going to be able to generate the revenue to cover it. So there's a lot of conversation and even some skepticism right now going on about whether or not a lot of these companies are overcommitted. As the rally went up, I mean, if you look at the factor performance this year, momentum has driven things more than anything else. When momentum is the driving factor in a market, you're going to get what we now call weak hands. So there were a lot of people that came onto that train, whether because they were retail traders and wanted in on the run, or they were active managers who were forced to come onto that train because they were underperforming so much. But they weren't necessarily on it strictly for fundamentals. So now here we are, some of the fundamentals, not necessarily of the companies, are coming into question, but the fundamentals of where is this revenue going to come from? How are they going to cover the spending are coming into question. So I think we're seeing some of those weak hands let go of these names.
The opposite of weak hands, of course, are jazz hands, as we're all familiar with. Elizabeth, can you do jazz hands?
You know who's just doing it?
I can, but
Riv.
See, Elizabeth
I think
did
the
it, too.
opposite of weak hands is diamond hands.
Oh, sorry.
I'm
Well, I
pretty
wanted
sure
I haven't
to
heard that. I
jazz
haven't heard
hands.
diamond hands since 2021. You remember diamond hands?
Yeah, I never said it in my life. That's another term that I just refuse to use. Anyway, what has become jazz hands, we talked about earlier, or the healthcare sector. And Elizabeth and I talked about this as well. And you look at the XLV, we're pushing towards levels that we saw in September of 2024, I think about 160 or thereabouts. Obviously, 15% or so of this is Eli Lilly. J&J is about 9%. With that said, there are other names now participating, Merck and some of the other ones. If you look at Abbott Labs and AbbVie, all getting off the mat for the first time in quite some time. I think it's a valuation thing. I think it's a rotation thing. I think it's going to continue in 26.
I think you'd have to be crazy to chase the XLV right here because it's not about fundamentals. It's not about growth for these companies. It's about literally underperformance and it's
valuation.
About valuation. Okay. I don't find that.
I totally agree. I agree with that. And I'll add this because I have been pounding the table about healthcare, but this is why it had underperformed so much this year. So when you've got a market that's rallied so much off of those April lows and a lot of investors that are trying to get in on this rally, you're going to try to find the best ways to put money to work, especially if it's new money. So healthcare is going to be a big beneficiary of that. And you just look at the industry groups over the last month, pharma, biotech, and life sciences, top performing industry group by almost 300 basis points. So it's happening, right? And again, this isn't necessarily just about fundamentals, but the other thing that I would point out is going into next year, midterm election year, typically a rough year for markets because we're not sure what to expect. And healthcare has consistently been one of the better performing sectors during midterm election years. So, and that's not necessarily fundamentally based. That's probably more of a defensive posture. But I want investors to keep their eyes and ears open for that possibility as well.
The other thing we have to talk about is energy, which again, very quietly has been getting off the mat.
Let me just go back. I want to make one point about healthcare. And so you talked about the midterms. The only thing is, Liz, we've heard a lot about the renegotiation of drug pricing over the last kind of few months. And we might see during the midterms or the lead up to it, you might see a back and forth about pricing going lower. I'm not sure that's great for these companies, right? And I'm saying it's great for people who have to buy these drugs. The other one is UNH. And we know UNH has been cut in half. But UNH runs the risk of losing millions and millions of customers with ACA premiums going higher and higher. You know what I mean? So I just wanted to make that point that I don't think healthcare gets that much easier in a election year, in a midterm year.
No, that's fair, especially, listen, I mean, I think all bets are off in terms of this administration looks at things a little bit differently. So it's a point well taken. I just think that for a lot of different reasons, I'll throw the M&A card in there as well. There's going to be a lot of moving parts in healthcare going forward. So yeah, it's run a lot. I still think there's room, but listen, that's what makes markets, right? Quickly, before we go to your note, energy is having not a day, but a couple days now sort of stacked together. And you look at the different names we talked about, sort of the downstream plays. Valero's having, I think it's at an all-time high. Halliburton and Schlumberger have made these bearish to bullish reversals. Marathon Petroleum's name we've talked about. So Elizabeth, very quietly again, along with healthcare, you get this move in energy that we talked about.
Yeah. And a lot of times I have to take this back to my macro roots. A lot of times you look at energy to confirm cyclicality in the economy. And right now it would appear to be that way. Energy, however, I would say honestly, since Russia invaded Ukraine, has been much more of a geopolitical move many of these times. But Guy, I know that your stance has been that these companies, these energy companies, which aren't always directly correlated to the oil market or the gas market, the companies have strong fundamentals. And I'm not an expert on commodities. I'm not an expert on energy like you are. So I will take your opinion on that to heart. And I think that at face value, we should listen up.
I am no expert on anything, as you've gotten to know, but I will tell you, like, there's been this stealth performance in these names that continues to watch. And I'm looking, Valero didn't make an all-time high. I think the all-time high was 182, but we're pretty close. So all these names, I think, are going to start to catch people a little bit off guard. I don't think enough people are focused on it.
Yeah. Again, I have a hard time thinking without some massive, I don't mean massive, some reemergence of global growth. You know what I mean? Like, you saw that the China data, I think earlier in the week, there was just some really weak economic data. And, with this trade war, we still have, like mid to high teens tariffs on, Chinese goods that are coming in here. So we have a truce, but who knows? All right, Liz, let's go to your note. And just so people know, I know sometimes it's not so easy to find. If you would like to have Liz's weekly note.
You have to have the keyboard that has those dats and dashes.
Correct. There's a lot. Yeah. So if you want her note in your email box, you have to go to SoFi.com/on-the-money.
All caps.
Yeah. And if you go there, you sign up for it. Yes, we preview it here, but you'll also get it in your email box.
They must get paid by the keystroke.
I think so.
Okay, hold on.
Yeah.
Remember, I teased that we were going to maybe change the URL or at least add a URL.
Is that
so
your breaking news?
Mid-December, SoFi.com/Liz.
No, stop. We said that 2 years ago.
We are going to have so much fun with that URL. Hey, Liz, by the way, Danny Moses asked me today, he said your podcast just stepped into his feed a little bit. It's the important part. What do you got? What do you got this week? And we can let's put it in the show notes. Let's link to it.
Yeah, the Jenny Harrington episode dropped this week. Yeah. I think I teased that a little bit last week. It's awesome, guys. Okay. I mean, honestly, it's awesome. We talked about her personal story. We talked a little bit about my personal story, how that influences how you invest. She talked about dividend stocks, which is another factor, by the way, that's coming back into favor.
We're there for it.
So listen to it. I think it's going to be one of our best performing episodes.
The important part.
No, and you were moved by it. We had a whole conversation. I love that.
She and I got to the end of it, honestly, and we were like, did we overshare? Did we say too much?
We
decided to just put it out there anyway.
on the Tape podcast a few years ago, you told us your story, which was pretty fascinating, how you made it into the markets and how you made it to the Big Apple, from Milwaukee. She was like,
that's another thing I've never
wasn't
said.
she?
I've never said.
What do you mean?
I've never said the Big Apple.
Who is your favorite, Laverne or Shirley? Did you have a favorite?
I was a little young for that.
Okay, Lenny or Squiggy?
I love both those guys. I was a Shirley guy myself.
Oh, really?
Yeah. Laverne was married to Rob Reiner, as you may or may not know.
I did not know that.
Yeah.
Genius of our time. Did you ever see the Spinal Tap sequel?
Come on, of course.
Did you hate it? And no one's ever talked about it. No one's talked about it.
It wasn't fantastic, but it got I got to see the old group again, and it was just it was worth the laugh.
Sorry about a little detour.
By the way, speaking of rock and roll,
with or without you.
Yeah, and I love the Police. And Mario and you did a great job with this one.
This is his.
Who are the police? I mean, I know who the police are, but the police did not sing this song.
This is the
U2. This is the U2.
Yeah,
one of my top 5
U2 songs. I'm going to look right now.
With or without you, off the Joshua Tree album, 1987. I saw them live during that tour. This Carrier Dome in Syracuse. Los Lobos opened for them. Los La Bamba. It was a big song back then. Do you remember that?
Yeah.
All right, Liz, with or without you. This is one that I think is important. We've heard a lot. Obviously this year we got a lot of folks were doged, a lot of people were furloughed, that sort of thing. We're seeing, AI disruption. I know you're talking about all of that. Let's run through that. That's a good note.
Yep. Okay. So we know the government shutdown ended last night, which means that we will start to get some of the official data. I should be specific. We may not get data for October, the big releases. We may not get CPI. We may not get all the jobs data for October because it wasn't being collected. And then apparently there's some sort of, I don't know, technical glitch or something else that's going on. So it's possible that we just have a blank space. Ode to Taylor Swift. We just have a blank space for October. But during this shutdown, we've had to rely on some private sector data, on private companies collecting their survey. And in the labor market, there's actually pretty good data that's still available. So what we're looking at in this note are things like Challenger job cuts. It's called Challenger Gray and Christmas for long, but we all call it Challenger. So Challenger job cuts and what that's looked like over this period. This first chart, this is just to show everybody what's happened recently because there's been a recent spike in those job cuts. So when you see the COVID-19 pandemic lockdown, obviously we know about that job cutting spike. More recently in 2025, and we broke it down by industry here, you see that big spike in March-ish of 2025. That was due to Doge, and you can see most of that is blue for government. But recently, this spike that we've had in October, which is like 175% higher than last October, 180 something percent above September's number. And it's in the other category. So let's move on to the next chart because then we needed to dig deeper. What's other? So here we are. We've got on the left-hand side, October, and on the right-hand side, year to date. So this is just to show everybody that the reasons have changed. So one of the cool things about the Challenger Gray survey is that not only do they collect the data on jobs that were cut numerically, but also ask companies, why did you cut? And the answers that they gave in October are much different than what we've seen year to date. Most of them said they cut jobs due to cost cutting. Second to that is because of artificial intelligence. Then you're down to market and economic conditions and the rest of everything. So there's a bunch of other stuff in there. But for this entire year, cost cutting has been a very, very small portion of why companies cut jobs. So this was a big change and frankly, a more concerning change because these are not things that are usually just a one-time thing. So if companies are now worried about their margins, they're trying to protect the bottom line, and they're actually laying people off to control their costs, that's not likely to be something that ends quickly. Now, we don't know yet. Maybe there's a different explanation, but it is a concerning change. And then AI, again, you can look at this positively or negatively. You can say, well, jobs are being cut because AI has made us more productive. That would be a positive. But at the same time, this is impacting real people and it's putting people back into this unemployment camp. So definitely something to pay attention to.
I don't know how you're in my head. I'm down here in Austin, Texas at this Ronnie Van Zant hotel, as I mentioned earlier, but you just hit the nail on the head in terms of why we should be focused on this. If you look at it, cost cutting was not a thing for the majority of the year. All of a sudden in October, that's the number one thing. And we've talked about this ad nauseum, that the first rung is when you're starting to try to save your margins, you're going to start to let people go. So there's obviously some concerns around margins, let people go, and that's what starts this ball rolling. So maybe it's somewhat anecdotal. I can't speak to that entirely. However, this is one of the more important charts I've seen in a while, Dan.
Yeah, I mean, Liz, it is nuts that we are not going to get a read on the October jobs and CPI. I mean, it just, and you talk about this data all the time, how you smooth it out, all that sort of stuff. It's going to be lumpy for the rest of the year. And, you think about this Fed meeting in December, and where was it yesterday? The CME,
60, I think it went down to 56%.
Yeah, well, depending on which source. Yesterday was in the 64s or so.
Yeah, we are CME Fed watch people here. It is 53 and a half right now. I mean, so it's basically
this one's actually down below 50 now.
And the Fed told us that they are worried about inflation, more so than the jobs market, labor market.
Let me tell you also what's going on this week is that there's a lot of Fed job owning. There's a lot of Fed speakers this week, and many of them are saying that they would rather hold off on a cut. It's an interesting statement to make given the lack of data and the fact that the jobs data has actually come in weaker. We've gotten a little bit of CPI data that also came in cooler than expected. So it's a confusing message to be sending given the lack of transparency that we have. The other thing that I think is really important to think about before this next Fed meeting, so there's always a blackout period before the meeting where the Fed speakers are not allowed to talk. That blackout period starts on December 1st this time. The Fed meeting is on December 10th. During that blackout period, we are going to get jobs data for November. We are likely, I'd have to look at the date. We might get CPI data. Regardless, the Fed will get CPI data for November. So there are some really market moving data sets that are going to come in during that blackout period. So this sort of jawboning that's going on right now is what's moving these expectations. Again, this is down. I'm looking at below 50% chance of a cut in December now. It could come down even further as they continue talking. But then as that data comes in, we've been in the dark for a while. As that data starts to come in, it could change pretty rapidly.
For next note, you could do Billy Squires in the dark. You could do a little
Lonely as the night.
Lonely as the night. You could do a little homage to Billy Squire. Mario, if you're listening, you're welcome.
He has no idea who Billy Squire is. Hey, you know, I kind of want to take a little whirl around, and obviously, Liz, with you, we're going to follow up on a lot of the claims data, and as we get into the new month, as it is, first Friday in December, obviously, is going to be a big one right before that report. I just want to highlight a couple things. Like, there's some big movers here, and Flutter, which owns FanDuel.
Mm-hmm.
There's certain, and I think this is really important from a sentiment standpoint. This was a handful of names that could do no wrong for a while, right? And now if you look at the performance here, this thing went from 52-week all-time highs just in August,
313-ish,
yeah. So all the way down here, it's approaching, 205 right now. And I just think this is a great, and let's pull up that chart because, Guy, you can eyeball it from the lows in 2022. You see this perfect uptrend that it just broke, right? And so I think, people ask us all the time, why are you guys throwing charts up here or whatever? A lot of folks trade very technically. You know what else trades very technically? Algos, right? And so there's certain things that, just make sense. We were talking about that Microsoft, it is it bounced perfectly right where it was supposed to, and it got rejected perfectly right where it was supposed to. You know what I mean? So these are things I think are important to pay attention to, but then also the price action, because I'm not sure that what they reported in the revenue miss is worth 13% to the downside. Look at Disney. It's down 9%. Guy, you were talking about it on Fast Money last night. Did you think the stock was going to be down 9%?
I actually thought it was a chance it would rally, and obviously that was wrong. But I think what's happening here, this has been a theme now for a while, in line is not good enough. And even if you beat and then guide cautiously, that's not good enough as well. And I think that's sort of the market that we find ourselves in. Real quick, might as well throw an Amazon chart because I think we've done a decent job here. We thought there'd be some gap fills to the downside, and here we are at 239.5 or so. And that's sort of coming to fruition as well, Dan.
Yeah, and here's another one. I mean, you see that gap. You see where the resistance was. It was right there at 240, right? And so, if there's probably an opportunity if it gets into that gap and you like everything they're talking about, you like that AWS is reaccelerating, you like the prospect for higher margins because of AI on the retail, and that's something that you've been talking about for a while. You don't have to give up on some of these stories, and there's going to be opportunities, I think, with some of this downward volatility if it persists. I got to hit this name, SanDisk. And this is one that is literally, it is so far up, it lives rent free in my head, Liz. Wow. And I'm not asking you to opine on the individual name, but this is a company that was private. It got spun out earlier this year as a public company. They make storage systems. It's been around for a long time. You used to use their thumbnails and then their other, and this is something where folks were trying to broaden out this AI trade away from, the picks and shovels, away from chips, away from the, hyperscalers, away from, CoreWeave. We've got to talk about CoreWeave in a second too. But this stock went absolutely parabolic from the September lows. And if you're looking at this thing, I mean, it's just nuts. And so there is one of their competitors in Korea reported, I can't even pronounce it, KIOXIA.
It's KIOXIA.
Yeah. They have 6-letter tickers over there, Guy. So they reported last night, slightly disappointing. A lot of folks are just extrapolating it. The point I would make here is they don't even have to be apples to apples. They, if it's apples to oranges and you're in this bucket, you better watch out below when you're like that. So this is one to keep an eye on. Look at Western Digital. Look at Seagate. Look at Celestica. We've been talking about. I can't get this one, CLS. Liz, when you see parabolic moves like this, and this is real market cap. I mean, these companies have gained tens of billions of dollars in market cap. Doesn't that make you get your antennas up a little bit?
Well, of course, I mean, 500% since September.
Yeah.
That's that's meme, right? That's
Who
sort of
does it? Who
that's a meme
trades like
stock
this?
move.
Yeah.
I mean, and looking at a chart like that, you have to first step back and ask yourself as an investor, has this company gotten 500% better since September? I'm guessing that, I mean, I don't know anything about it. Have the fundamentals gotten 500% better? Was there some major change in the way that they run the business, or some sort of major customer acquisition or total addressable market that ballooned? I don't know. I'm going to guess not 500% worth. So that chart that I've shown many, many times, where you've got the amount of returns that's attributable to earnings, and then the amount of returns that's attributable to multiple expansion. I mean, that's got to be mostly multiple expansion. We also know that those charts, when they turn in the other direction, multiple expansion gets eaten very, very quickly, if not faster than it went up on the other side. So definitely be prudent, manage your risk in names like that.
Real quick before we get out of here, MicroStrategy or strategy now, 52-week low today, Bitcoin trading about 100,000, and that should be concerning, I think, for some people out there without question. Jim Chanos recently took off his position. He did extraordinarily well there. But CoreWeave's another name that we've talked about.
Yeah, so this one reported earlier in the week, and this is one of those ones. It's a NeoCloud. You guys all know this story. Four of their customers and their big hyperscalers, Microsoft, Meta, Google, and I think there's one other, OpenAI. They are 70% of their revenue, right? And so the company reported, and it was light. And I'll tell you one thing: the CEO was on with Jim Cramer. Jim gave him a hard time, man. And there was a leg down after that. He didn't really answer the question about why the revenue miss, pushing out a customer, pushing out some of the project, that sort of thing. And, the other thing is that really stuck out to me, and we talked about this earlier in the week on one of the podcasts, is that, Satya Nadella, the CEO of Microsoft, who is their largest customer. And you remember this a few months ago, guy, they canceled some of their contracts or pushed them sort of out, and Satya is saying that we are not constrained on chips anymore. That would be the GPUs from NVIDIA. We are power constrained. And then the CEO of CoreWeave was saying the exact opposite. So, like, to me, I know that folks are just going to take Satya's word over the other. And again, I'm not a technologist. I'm just thinking about this story. I'm thinking about, guy uses this expression, the sanctity of this CapEx.
Yep.
And these are going to be the first ones holding the bag, and obviously Oracle too, because they've made these massive commitments and they basically have to build out this infrastructure. But if demand slows down, or demand stays put, but they can't access the energy, you know what I mean, the power cells that they're talking about, then we got a problem. So I just think this one, it's going through those lows, guy, from August and September. A lot of the move in this name came, in the weeks, the months, a couple months after its IPO. This one makes me a little nervous, and I definitely think there's going to be a handful of these names that are going to be the canary in the coal mine.
Well, this makes November 19th with NVIDIA a lot more interesting, I think, especially given the move. And very quietly, I mean, NVIDIA is down probably, I want to say 11% from its all-time high-ish. You can eyeball it for me, but another one of these stealth moves to the downside that I think is going to continue.
All right. So yesterday we talked about a position that we put on 2 weeks ago in NVIDIA. Just to be really clear, we're going to take this off. It was the 190 put selling this tomorrow. Today's Thursday.
Today's Thursday, the 13th.
Yeah. So and then owning next. The owning next week, 190 put, we're going to leg into that trade into the earnings. I think you and I agree. We'd like to be long some put exposure there. So we're keeping a close eye on that. It's through that 190 strike. I just wanted to kind of put that out here. All right, Liz, what are you telling your people? What are you telling your members over there at SoFi if your phone's ringing off the hook in a day like today? Because it doesn't seem like we had down 1% days last week, and we made it all back up in not too short order there. Like, what do you do in an environment like this?
So I think the prevailing theme has been buy the dip, right? Anytime you get a day like this, it's this buy the dip mentality. I do still think it's a little bit of a pullback in a rally that will continue through the end of the year. That's my opinion. That's what I would tell people. But if you were going to buy said dip, I wouldn't be throwing a bunch of new money into those large cap tech names that are just under pressure because of this rotation in factors. I would be looking at some of the high quality names and high quality sectors. I'd be looking at low volatility stuff. I'd be looking at financials. So I think that there are opportunities to put money to work if you're trying to ride this rally. And I think this is a rally that you ride. You don't necessarily stay in it until, mid next year, because I'm not sure it lasts that long. But I think you ride this through the end of the year and be prudent about where you're putting your money to work.
When I was in college, one of the guys on the football team used something called Dippity Doo. It was like a homemade type of thing that he put in his hair. I was always sort of grossed out by it, but now here I am at my advanced age, and I use pomade on a daily basis. If you're interested,
making homemade
Dippity-Doo.
pomade seems.
No, I don't make homemade. I don't make
effort.
my pomade myself. I actually buy my.
No, I know.
pomade.
We talked about this. You use American Crew.
Yeah, you know this.
You and like 95% of other men.
By the way, that's not cheap. That stuff.
I know, and a lot of stores sell out a lot.
It's incredible.
Greg runs into a shortage pretty often.
That's why when I do see it available, I get a few of them. It's like a pre-facial scrub.
Yeah.
Or St. Ives. Anyway, that's not what people are
Back
here
to
for.
you. Are you gonna say?
We saw Griffin River Thomas. We saw Elizabeth
baby.
Thomas.
Beautiful.
We briefly saw your husband. I won't dox him, but this has been fun for me. Dan, has this been fun for you?
Been great down here in Austin, Texas. Liz, like we said, we're gonna go find your coworker, your colleague.
Co-workers.
Yeah. I don't know who's there. I don't know who's there.
We're gonna talk you up. I mean, that's what we do.
If Noto's here, watch out, because I'll get all up in his ass and tell him what a stud you are.
Yeah, I mean, I can give you his email address if you.
No, I know this. I actually texted him on Veterans Day, as I often do. I text all the veterans that I know.
Oh, that's nice.
Isn't that nice?
That's very nice.
Whatever.
Yeah.
That guy is that guy.
I'm a
You are that guy.
Yeah.
That's it, I think.
I went to Terry Black's barbecue last night.
Oh, I love Terry Black.
I was gonna say, did you guys get some BBQ?
It was great.
What's
$48 worth of barbecue? It was like you go through the cafeteria line and they weigh everything. So I had the pork ribs, I had some turkey, and I had the regular sausage links.
Yeah, I did.
Little potato salad on the side, a couple beers.
I had a glass of water and went to bed, Elizabeth, in case you were curious.
What's Austin barbecue sauce like? So there's like Carolina barbecue.
Well, they had all three.
Vinegary.
They have a sweet, they have a spicy, and they have right down the middle. You know what I mean? So
okay, but it's thick.
I'll have none of them.
No, it was not that thick. Yeah. It was delicious though. I'm a big barbecue fan.
It's messy.
You're hungry.
Yeah, now I'm hungry. Yeah.
Liz, you and I once we sat outside at Hill Country Barbecue, didn't we? Like years ago,
Did we?
maybe during the pandemic. It was on like 26th Street didn't we or no?
I don't know. Was it before a Dave Matthews concert?
Dude.
Oh my God.
It might have been.
So my friend John and now Dan's friend John was in town.
My friend.
He's your friend now.
Okay.
Well,
He's a great friend of mine. Guy went to college with him, and I've spent like 10 times more time with him over the last 5 years.
That's true.
Yeah.
Anyway, he discovered and produced Dave Matthews. Dave Matthews doesn't like Dave Matthews.
Guys, so right.
It's some of the shittiest music.
Wait,
it's
Liz,
really
you remember
awful.
all week before we were going to the concert, you just kept on going, dude.
I love that song.
It was just
Ants Marching. The intro to Ants Marching just takes you right back.
Under the Table and Dreaming, their first album.
And
John Alasia has worked with Dave since then.
I'm telling you, John discovered Dave Matthews at the Bayou in Georgetown.
Yeah, John's the man. You gave him a shout out on the final trade. Sure. John was visiting us for the Fast Money.
I said Google the name.
Yeah, you did. All right, Liz, thank you so much for being here with us. Guy Adami, take us out, my man.
This has been the Market Call here from Austin, Texas. Tomorrow's Friday. We're traveling tomorrow morning, so you won't see us unless something ridiculous happens. And then maybe we'll sort of fire up the skillet. We got a whole day of content coming to you from
we're
here.
Excited. Yeah, we do. We're actually sitting down with a husband and wife couple here, Jenny Just and Matt Hulziger. And they started a company called Peak Six. It's one of the biggest option trading firms in the world, one of the most successful ones. So we're going to talk a lot of options. We're going to talk about kind of their institutional brokerage, which worked into
and her poker playing.
Oh yeah,
she's a renowned poker player.
So we got that. That'll drop, I think, on Monday.
And your favorite podcast store.
Okay, go follow us, rate us, review us, share it with friends. That's how people find.
Smash the shit out of the like button.
Right. On that note, Liz, have a great weekend. We'll talk to you.
See ya.